Are we already on the way to a recession? First of all, you look at the prospect of a per capita recession, which looks likely in the short term, and then potentially a technical recession as well. What's your read?
Well, we've got the first leg of a per capita recession with these numbers today. Although we got overall growth of 0.2, the per capita number was down 0.3. The annual growth in per capita GDP is only at 0.3. I mean, not much has to go wrong for that annual figure to go negative. Indeed, we get another weak GDP figure for the quarter we're in now, and we'll have that per capita recession. That's I don't think the big deal. I think it is largely reflecting the fact that we've had a surge in population and a slowing economy. The bigger issue is, what does this slowdown we have to have going to look like? There's no two ways about it. The economy has to keep slowing in order to get this inflation and cost of living pressure down. It's just what extent. And I think at the moment, there's a real risk of a technical recession outright for the economy at some stage in the next 12 months, maybe towards the end of this year, early next year. But it should be mild and it should be short-lived. It'll get a lot of headlines and it will be of some concern, but we should be through it quite quickly. I think the risk, of course, is that if we try and fight that by not either raising rates enough or keeping a lid on wages or whatever is the policy that's necessary to get rid of this inflation, that you do risk having a much bigger recession down the track because interest rates have to go up by a lot more. So in a way, a mild technical recession is a much better outcome than a worse one 2 years hence. And, at the moment, I think the governor's very worried about this economy, and that's why he raised rates this week.
And when we talk about a per capita recession, it basically means, if you can just explain that to our viewers, it's in the context of a rising and fastly rising migration number.
Yeah, well, economic growth is essentially the population growth, but plus what all of us do in terms of productivity. And we're getting very sort of skinny economic growth at only 2% over the last year, and we've got about 2.3% population growth. So what it's telling us is that the economy per person is actually shrinking, which is a proxy for everyone's living standards going backwards. But I think that's quite obvious given that real wages are falling and it's tough. It is a tough environment out there. So this per capita recession, I think, is really just a reflection of a soft economy. I don't think it's something that we should be overly worried about, other than the fact that we don't want it to hang around. We want to be able to get our economy back to a position where we can grow at 2 or 3% with 1.5%, 2% population growth. Our living standards are going up, real wages are going up. And all of that requires us to get this economy back onto an even keel, as the governor says, to get rid of this inflation and allow government policies, reforms, competition to drive productivity growth. All of that is not going to be apparent in the economy over the year ahead. In fact, I think we're going to find the economy a very challenging environment the next year, but it's all in the name of getting us back onto that sustainable path and getting standards of living moving up and real wages moving up over the next 5 to 10 years.
And do you, just finally on the productivity question, are you reassured by what you're hearing from the government on that front?
Look, I'm not. The productivity measures thus far that they've announced in the last 12 months, I think, are very much at the margin. There's some good initiatives there, but they're quite minor. I think we need a much more serious look at this in terms of things like competition policy, taxation policy. And I'm just worried that the government doesn't have the political will to actually do this, and that we'll only actually see this addressed once it becomes an apparent and clear and persistent problem, which is obviously too late. So I think there more can be done, and I don't think hoping that things will return to normal or that productivity growth will improve is enough. And I think the other big issue is that the size of government is huge and it's getting bigger, and that's not necessarily pro-productivity, because I think most people would accept that the public sector is not as productive as the private sector. So I don't think the productivity agenda is at all clear and is at all convincing. And I think that's going to be something we'll see more talk about over the course of the next year as we go through some very difficult economic times.
Indeed. Economic advisor at Judo Bank, Warren Hogan. Great to chat as always.